Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 860A, and today's date is January 6th, 2016, and the title of the episode is U.S. Government Central Bankers' Economic Recovery Illusion Has Completely Disintegrated. Let's get right into the economic collapse financial news. Now, ADP came out with their ADP payroll, and it has soared to the highest since 2014. So it looks like, according to Zandy from ADP, that we are going to hit full employment by mid-year. Everything's fine, people. We're in a complete recovery of the economy. There is absolutely nothing wrong. Well, unless we look closer at the data and we look through all of the propaganda, we see there are problems. We see the data isn't as good as everyone wants to believe, and we see that this data might be manipulated like all the others, and we're starting to head down that path. Well, in any case, the December monthly change was up by 257,000, which is a lot better than expected. They expected only 198,000, and this was a huge rise. It was the best job gains in a year. Does that sound right to everyone? I mean, we know that the BLS has been manipulating numbers. We know the housing numbers have been manipulated for the last 10 years. But they're trying to tell us that goods producing employment rose by 23,000 in December, and well up from a downwardly revised 2,000 the negative 2,000 the previous month. The service providing employment rose by 234,000 jobs in December, up from an upwardly revised 213,000 in November. And the question is, how can this be? Well, if you look closely at the data, now we've been talking about manufacturing quite a bit. We've been talking about the service sector, and the U.S. manufacturing sector added the most jobs in 11 months in December. Now keep that in mind. The U.S. manufacturing sector added the most jobs in 11 months in December. The question is quite simple. With ISM manufacturing employment at post-recession lows and U.S. manufacturing PMI at post-recession lows and inventories to sales ratio at post-recession highs, why are goods producers hiring at such a frantic pace? Does that make sense to anyone? No, it doesn't. If manufacturing is declining, the Baltic Dry Index is declining, the deliveries on trucks is declining, rail deliveries is declining, why is there hiring in manufacturing? We just got out of the holiday season. Something has to be manipulated here because it doesn't match up. It's almost like the housing data. When we talked about the housing data, how everything didn't match up. Lumber demand, construction spending, rail traffic, and then we find out that, yes, it was completely manipulated. Well, I think the same thing's happening right now. This is all manipulated. Now, in the housing industry, we are starting to see that housing is starting to really slide and slide hard. And when we look at mortgage applications, they've been going up and down, mostly down. That's the trend. And we see that mortgage application volume fell dramatically over the past 2 weeks, even when they adjusted for holiday, over the holiday season. Total mortgage applications slid 27% on a seasonally adjusted basis for the week ending Friday. 27%, and that's seasonally adjusted. Refinancing fell by 30%. The housing industry has never recovered. The housing industry is a complete and utter bubble controlled by the central bank, hedge funds, investment companies, foreign investors who pay in cash. The American people while they're still buying a couple houses here and there, are completely out of the market. And this shows us once again that they are out of the market, and the real estate market is crumbling and falling apart. It will not improve. The only way they can get it to improve is to pump in more free money, to bring the interest rates back down to zero negative rates, to get more people into it, because at this point, with the prices so high, a lot of people are completely kicked out of the market. And when we look at U.S. factory orders, we see, well, it's not any better. They've tumbled year on year for the 13th month in a row. They've never dropped this far. For so long without the U.S. economy in a deep recession, I'm going to say / depression. November's 4.2% year-on-year drop is the 13th consecutive monthly drop. Revisions to durable goods data shows a 1% drop in new orders, if you remove defense in November, after rising 1.4% in October. And you have to remember, a lot of this data has been kind of manipulated with defense orders, defense aircraft and parts orders. And this is at an all-time high at this point, and it made this surge to 46.9% because what is happening out in the Middle East, out in Eastern Europe, and in the Pacific. So right now, factory orders, they are flashing a deep red recession / depression indicator. It is a complete and utter disaster. And orders, factory orders, they're going nowhere. And this now is seeping into the service sector. Because remember when they told us, and we reported on this, when the United States doesn't need manufacture anymore. It's a strong service-oriented country, and that's what we need to be looking at. Well, we know a country cannot survive on service. It needs the manufacturing. Well, as goes U.S. manufacturing, so does U.S. services. And we see the U.S. services PMI drop to 54.3, the lowest since January of 2015. The output and new business growth slumped to about 11-month lows. Optimism completely dropped. Input costs inflation continued to moderate, as suggested the pace of hiring has slowed since early in the year as businesses have become more cautious at this point. So we see that services is now catching up with manufacturing, and they're both declining. Market says the following: service sector losing momentum alongside a stalling of growth in the manufacturing sector. The pace of hiring has slowed since early in the year as businesses have become more cautious. It would appear right now that the service economy is not going to save us. Their meme has just collapsed. So now what are they going to say? What are they going to use at this point? They're running out of ammunition. They're running out of things to say this is a recovery. So everything they've been talking about in this illusion, it's disintegrating. It's falling apart. It's collapsing. And at this point, this whole system does not match up to what the government and the central bank is telling us. And we're starting to hear that this growth that is supposedly coming, it's not coming at all. Actually, everyone is saying that global growth is going to be slowing. And what that really means is that we are in the collapse stage here. Because every time they tell us, oh, it's going to slow a little bit, we're going to go through a little speed bumps, that means it's going to be a lot worse than what they're really saying. The World Bank just came out and said the same exact thing. So the UN, IMF, World Bank, all saying the same thing at this point. Multiply that by 100, that's where we're headed. Now, what's very interesting is that Standard & Poor's slashed the credit ratings of 100 112 corporations around the globe to default D or selective default SD in 2015. This is the highest number of global defaults since 2009, when an unthinkable 268 companies defaulted, and not far behind the second highest default tally of 125 in 2008. So right now, we're at 112. In this recovery, something's wrong, wouldn't you think? Well, don't worry. It has to be other countries. It can't be the U.S. And you would think that it would be like Russia, Brazil, China, Argentina, where they downgraded the companies. But guess what? It was most of the companies here in the United States. They rank high on the list here in the U.S. In total, 66 defaulters were U.S. issuers, up to 100% from 33 in 2014. So what does that tell us? It tells us there's a big problem on the way. If we compare this to what happened back in 2008, we are at the point of where we were back in 2008. Basically, the economy at this time has gone nowhere. Actually, it's much worse. Think about this for a second. The stock market is at all-time highs. Manufacturing, Baltic Dry Index, retail, GDP, unemployment is a lot worse now than it was in 2009. And the market already fell in 2009. Now we're at the same level, but the market is at all-time highs. So when this market comes down, what do you think is going to happen? It's going to be a complete disaster. That is what is going to happen. And remember, if we're at the same point right now, or much worse, and we are much worse because all of this is one big illusionary bubble. When this market comes down, it's going to bring everything down further. It's going to be so bad that people are not going to understand what just happened. And this is what I've been talking about when we say get prepared. You don't want to be one of those people out there running around saying, I got to run to the supermarket before Capitol controls. I got to get a weapon because there are now looters on the streets. I need gold and silver, but I can't get any at this point. I wish I put some cash in my house. I wish I had toiletries. I wish I had water. You don't want to be at that point, because if you are at that point, when the system comes down, I'm sorry, but it's too late. And I don't want this to happen. I don't want people to suffer. I want people to be ready for what is coming in any way you possibly can. Now, I know everyone's at a different level. I know everyone can't go out and, purchase as much as they possibly can. Everyone is at different levels. People have lost their jobs. But we have time. Time is running out. And you can do this slowly. At least bring in some food. Bring in some water. If you have extra money, buy some silver if you can't afford the gold. But there's always a way of doing little things to do it slowly. If you have the money, yes, you can do it all at once and it's not a big deal. But the point is that we know at this point, and we've been looking at this, and we are seeing that this whole entire system cannot sustain itself anymore. They can keep creating this illusion, but slowly but surely it's collapsing to the point where they can't pretend anymore that everything is fine. And they know this. And this is why we see all these events occurring around the world. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.